Welcome back, everybody. Ask the Collective 16. My name is Rich Brubaker, founder of Collective Responsibility, and today we're answering one question about how do you build a socially minded enterprise in China? What's the role of philanthropy? What's the role of building a business model? We hope that you enjoy this episode, and if you do, please remember to like, share, and comment.
Philanthropy funding is an important source for social enterprise globally. Is this true for China? Also, how is the landscape of impact investing in China?
Thank you very much, Chong Young, for your question. Always happy to answer questions from fans. So let me step back a minute and talk about the history of philanthropy a little bit and the history of social entrepreneurs a little bit. Long and short, before 2008, philanthropy was in a stage where I would call it quid pro quo, largely run by the gongos, the government organized non-government organizations, and it was largely dictated by them and by the opposite side of the equation, which would be the donor. And the donors at the time predominantly came from larger companies or from companies in general. You also had academic institutions where at the class level, the students would all pile some money in, or maybe the employees would at the company level, but we're talking like the executive level decision made to write a check for 100,000 RMB, a million RMB, and above. At that time, when a firm or a leader gave the money, it was for kind of a known cause or for a known outcome. The cause is largely dictated by who they know, or maybe the gongo themselves had a network there that might be commercial, political, or through branding, PR, through their media relations, and you want to fit into there. It wasn't necessarily that the brand giving money or that the individual giving money was helping to kind of move that cause forward. That was kind of secondary to what they would get out of it, be it media hits, meetings with the mayor, whatever it may have been. And that was kind of preceding 2008. But in 2008, you might know they had the Sichuan earthquake. It was one of the worst earthquakes that I remember in my lifetime, but definitely for this region, it was one of the biggest ones. At that time, China's populace just said, we're all going to give money to this national disaster. And you really saw, for one of the first times, just a wholesale support of a specific cause, which was the individuals impacted by the earthquake. Now, at the time, there's only one primary funnel, which was the China Red Cross. But at that time, what was really interesting to see was how individuals were getting more and more engaged by that process of giving. They started wanting to know where the money was going. They want to know who was impacted. They want to know for their 10 kwai what was possible. Now, the system itself was not set up for that. It was set up for large donations and for donors who generally didn't ask for an impact report. So as you might expect, there was a failure, and a big failure in the name of Guo Meimei. She really lit this off. She was loosely affiliated with the Red Cross through her boyfriend or through a friend who gave her some money to buy a couple Maseratis, so not a small amount of money. But that one specific person, that one specific source of corruption basically unwound a lot of goodwill, not just with the Red Cross, but with NGOs in general. But what kind of came out of that, the phoenix that rose from the ashes, was what we're seeing now is a very general, higher level of individual engagement. So at my own charity, where we manage volunteers, our numbers have really skyrocketed. And what I find is that if we're doing our job, the retention, the interest, the passion for giving, the passion for the issues themselves, the passion for helping others, that exists, and that's a really good thing. But it also means, from the NGO's perspective, that the industry had to completely change, and those that have done really well. Now, let's get to the social entrepreneur side. About 2008, 2010 was when the topics of social entrepreneurialism started to come up. Ashoka became kind of a known brand here because they had people going around talking to, hosting talks and looking for the entrepreneurs. Now, I've never been of the mind that we should be prescriptive in our definitions. So for me, a social entrepreneur can be someone who's for-profit or non-for-profit. Their whole mission should be to solve a problem, and as long as they build a structure to do that, a team to do that, and they have a vision for execution and the ability to execute, that I'm happy. But there are kind of divisionary lines. So let's go traditional. If you're a for-profit social entrepreneur, then philanthropy should not have a role in your world, really. You should be building a business model. You should be looking for other sources of funding that are more of a, you're selling, or you have a service, a product that you're putting out there into the market, and then you are basically taking some of the profits, or maybe all the profits, maybe half, like Tom's, like buy one, give one, and you're then investing that back into your organization as well as in the community. And it's a fantastic model. I know a lot of people who do it. I'm a big supporter of them, and there's nothing wrong with doing it that way. But then there's also the nonprofit side, and this is where kind of things get a little bit hazy sometimes depending on who you talk to. Are they a social entrepreneur or not? And for me, regardless, this type of social entrepreneur, they're definitely still tied to philanthropy in large part. And what they're trying to do, like what we're trying to do within our own organizations, is move off a pure philanthropy model, move off the galas and the golf courses and selling little trinkets and basically living off of donations hand to mouth, and develop a product or service that can provide stable income. And I think that this is where ultimately we're going to find a middle ground between the for-profit and non-for-profit. And you're going to find that a little bit of philanthropy comes in here. You might call it impact investment, because a lot of impact investment really is, we're going to invest in you, preferred debt, maybe take some equity. But a lot of times I've seen like where the investor just becomes a donor. They just kind of write it off as a grant in the end. But at the same time, what I'm hoping that we'll see is that social entrepreneurs on the for-profit side will help NGOs or nonprofit leaders start to see really how to create value proposition for their organization so they can sell product and service in a way where they don't have to kind of justify their administrative costs. They don't have to justify their existence by saying, oh, we're doing good. And so I think that there's really lessons for both. But philanthropy and philanthropic dollars, renminbi, are still a large part of this whole ecosystem. A couple of things I think are going to be really interesting going forward is, right now what we're starting to see is a lot of socially minded entrepreneurs start in food, wellness, healthcare, education, and other areas. I've even seen some that are in the tech space. And for them, at the end of the day, they're going to be no different than a business. They're going to build a business that basically delivers a higher quality of education, of healthcare, of food to the market. Maybe it's new families, maybe it's poor children, maybe it's the elderly who want to skill up. It doesn't really matter. They're going to have a product, they're going to have a service, they're going to have a customer segmentation, and hopefully they're going to have a sustainable business model, revenue streams that allow them to do the work they want to do, regardless of how much money they personally make as an owner, or they decide to plow back into the organization over time. And so for me, at the end of the day, the best place to be when it comes to this, and why I really like China as being a social entrepreneur or socially minded entrepreneur, is that the market here is absolutely kind of agnostic in a sense as to whether or not you're a nonprofit or a for-profit. They just care about your value proposition. And so what I think actually is an upside is that you have the opportunity here to make your market. You have the opportunity to identify your customers. Sometimes there'll be philanthropic, there'll be people who just believe in your mission. Sometimes there'll be people say, this is the best organic blueberry I've ever eaten. And sometimes it'll be the government saying, we really need your help, we really like your model, we're going to give you a little bit of money so that you can cover your costs, but that will allow you to cover your costs and maybe do some of your other for-profit or non-for-profit work. So I really hope that answers your question. It's a really big one for sure, but at the end of the day, what I think is exciting about what's happening in China is that the move from nonprofit to for-profit here, in some ways it's easier to go a little bit back and forth. It's really about your business proposition, really about your model. But because there's a skeptical side of the market, it definitely forces you to think about, how do you diversify and stabilize and find security in different revenue streams, and different product groups, and different market segments, so at the end of the day, you're able to achieve your mission as a social entrepreneur or as a socially minded entrepreneur. Answering your second question about impact investing in the landscape, just like philanthropy, that has also changed quite a bit. And that kind of came in, I want to say 2012, well, let's call it 10 to 15, with 12 being the nice middle spot. There was a lot of talk up front from Ashoka, from So Asia, from LGT Ventures, and from others who were basically going around hosting workshops, meeting people they could, developing business, trying to find ways in, trying to find their first investments. And the reality is that most of them did not find many, if at all. They may have made 1 or 2 deals. Now, on the Chinese side, there's a couple of them, Narada Foundation and Renda, that they seem to be doing quite a lot more, but what they're doing is investing actually into more traditional entrepreneurs, which is kind of getting back to the last question that I answered. Impact investing still has a space for sure. I think part of it is that the funds need to find their way, they need to find the right space for them. They also need to learn to maybe trust their gut more versus go through due diligence so much, because a lot of deals were killed in due diligence because there's missing paperwork or something like that. For me, the impact investor should come up front, but then the fun thing, the interesting thing that I'm seeing is that now more and more traditional finance is coming into this arena. And that's because at the end of the day, socially minded entrepreneurs are solving a problem that's outside. They're solving a problem that society faces, that the environment faces, that the economy faces. And in China, that's a big market, right? I mean, talk about clean food, clean air, clean water, affordable education, affordable healthcare, elderly care. All of these have consumer bases in the hundreds of millions. So if you are an entrepreneur who's socially minded, who sees a business model that a traditional entrepreneur doesn't see, because they're just looking for the straight business top down versus looking at the ground first and then going up, guess what? You're still likely to attract the same level of investment as long as you have a business model. So this is where things get really interesting for me, is that the traditional investors are getting into the social impact space as long as the business model is there. And what that means for me is, as we're maturing in terms of the entrepreneurs themselves and the organizations, they're going to start taking away market share. They're going to start being the innovators in a market where the traditional brands just haven't kept up, which is why you're seeing the Unilevers, the AB InBevs, and the other large brands, the large conglomerates, buying into these organic groups, buying into these healthcare groups, buying into these air purification groups, because they can't do it internally. But what they're seeing is that there's a huge market for it, and they need to participate in that. Otherwise, their own model is gone. So for me, impact investing has a space. It's usually earlier on. It definitely needs to start to restructure so it's a little bit more active, and it really helps these entrepreneurs grow versus just be a passive investor. But when it's done right, it develops and builds amazing companies who are able to achieve their goals, execute on a vision, and impact society in a positive way. So thank you again for your questions. I hope that these have answered them. If not, please feel free to answer or ask a follow-up down below. I'd be happy to answer it next week. Thank you very much and have a great week.